Welcome to this Q&A webinar for the 10th of September 2020. I have to say this is a trading disclaimer. You can pause the screen, the video, and read it at any time. So, you know how this webinar works. I ask you in the email that I sent and the post that I shared in the community to prepare some questions, whatever, so we could go over them, because this is the moment where you will have your doubts answered in real time. Okay, so I've got some questions that some of you posted, so I'm going to start with those. Some of these things might seem basic for some of you, okay, but I'm sure you're going to learn something from it when looking at the live charts. Okay, so I've got some questions prepared over here. I'm going to show you. Okay, so I'm going to start with the original levels, trend lines, the scoring levels, and all that, and then we are going to go over some assets. Okay, good. So I'm going to start with this. Let me bring this chart. Okay, I'm going to start with the Aussie dollar and with the original levels. Somebody asked about the original levels, so I'm going to talk about the original levels. So we have several types of levels, supply and demand levels. So we've got, okay, we have the fresh levels, okay, fresh levels. Then we've got the original levels, and both of these levels can be tested. Okay, well, not this level. Any level can be tested or used up. Okay, so hello, Junior. So the definition of an original level is a level that is not a reaction to anything else. So a fresh level like this one, for example, here, let me take a look at this one here on the Aussie. So this is here, this one is a level that broke something here on the left, we cannot see. Is not happening out of the blue. I mean, it is reacting to probably, yeah, the trend line breaks, supply, this is demand. So this level here is reacting to a previous level that was already tested. You follow me? So this is a level over here of demand, price rallied, retraced, tested the level, and now price rallied again. So this level is not an original level. This is a level that is created as a reaction to a previous level. That is the definition of an original level. Why do I need to know if it is an original level or a tested level? Well, original levels are even better than the fresh levels. Sorry, original levels are way better because they are happening out of nowhere. Okay, like let's say if we look at the bigger picture, okay, like this one on the 12 months, this is happening out of nowhere. So this is an original level. It is not created as a reaction to a previous level. So when it first retraces those levels, usually price reacts very strongly. Moreover, if it is trending up. If you are thinking of maybe going counter trend, the original levels are even better than fresh levels. Moreover, if we have support of bigger time frame confluences, bigger time frame imbalances, overextension, and all that as explained in the rules. So an original level is a level that is not a reaction to a previous level. And we'll take a look at, I don't know, to the euro dollar. I've got some of them here prepared. That candle there is scary, which is great for shorts. So we have here on the monthly there at the bottom, we've got a trend line break and a brand new area of demand. Now we've been talking about this imbalance for quite some time. So when price was there, we were saying longs will be possible again when price retraces to that area, and then price rallied. So now trend line has been broken again, and we've got another level over there. So this new brand new level here that is created by the break of this trend line. Okay, consolidation will happen there. So this is not an original level. Why? Because that level here is a reaction to a previous level. In reality, you don't really care if it is original or not. It is good to know that if we start getting levels on top of level on top of level, then that area is going to be used up on the smaller time frames, and price could continue to penetrate or further penetrate the imbalances that are being created. So that's the explanation of the original levels and the non-original levels. Okay, so in a trending market, we always want, well, in any market, we want always fresh levels. We don't want to trade tested levels. So in this one over here, we've got a tested level. So we would have to wait for confirmation, but we have a brand new level of demand over there. So that is the confirmation of that level. Okay, and all this is happening in the bigger time frame, bullish bias long term. Any doubts about this concept about the fresh levels? Because we're going to continue with something else. Because there is something that many of the members are struggling with, and that is the trend lines. Okay? Because probably, I don't know, because I don't know all of you. Well, actually, I don't know any of you, really. Just a few of them that I've met in some of the meetups that we've done in Tenerife, in London, Singapore, and all that. So usually when you will be looking at many traders drawing trend lines like something like that, okay, or maybe something like that, which is probably great for them, okay, or something like this. I don't know. I'm just so used to drawing trend lines the way that I do. So, but those trend lines are not valid as per the rules, because it is not connecting the latest impulses. And since we are trading multiple time frames, we're using a sequence of 3 time frames. We need to know as soon as possible when one of these time frames is losing steam. And the only way that I could think of, and I tested thoroughly for a long time, and now over the years in live testing, and also you, many of the members. So the only way I could think of was drawing a trend line connecting the last 2 impulses. Because if we are using the top time frame, and then the middle time frame, and the lower time frame, if we start drawing trend lines like most people do, something like that, okay, which is great. I mean, they will say there was a touch here, another one over there, another one over there, great. But there is no consistency, there is no methodology, it's not a mechanical way of drawing trend lines, because maybe somebody would draw it like this, okay? So I've seen so many trend lines, many strategies that I've just bumped into, and it's not something that I like, because it's very subjective. Some of you might think that this is the way that we draw trend lines is also subjective, but in my humble opinion, it is not, and it's been proven over time. The thing is that you might not have the experience to read price action correctly, and you might think, like one of the members mentioned in the webinar post this week, that I was conveniently drawing the trend lines for the purpose of the lessons of the course, and that's not true at all. Okay, so there's price action that you have to read, and you have to be very good at it. Okay, you just can't look at the charts and suddenly know or be able to read price action like a pro. Okay, it takes a long time, years of experience to read price action and candlestick correctly. So, for instance, if we look at this price action over there, you might think, well, what is this? Is this a valley? Is it a CP? What would you say about this one? Is it a rally or a CP? A valley or a CP? A pause or not? What would you say about this one? A valley? Okay, yes, it is a valley, because we even have a close, 2 candles closing underneath the mother candle over there. this is a valley. It is not that clear, obviously, but what about this one? That is super clear, okay? But that one is not that clear, okay? That one is not that clear. That one is super clear. That one is super clear as well, that one. But if we take a look at the mother candle here at the left, the one candle that paste over there, it even closed underneath. We've got a bullish engulfing pattern, and this definitely looks like a valley, okay? Because of the wick, well, no, we'll know which wick. It's this candle are closing underneath the low of this candle over there. So it's drop, rally. It's not even basing, okay? Drop, rally. Let me zoom in, and if I stretch out the chart, you're gonna see. Now, does it look like a CP now, Anwar, or like a valley? Okay, this looks like a valley now, very clear. But if you have small laptops with 13, 14 inches, okay, screens, and then you will see something like this, okay? Moreover, if you've got maybe 4, 5 charts template, then you're gonna see all these candlesticks super like compressed, and you're gonna be missing, you're gonna think that this is a pause. Okay, you're going to think that this is a pause. Look at the monthly chart right now. This looks like a pause, definitely. But let me zoom in. Okay, let me stretch it. This definitely looks like a valley. Make sense, everyone? So, like Anwar said, the trick would be like zooming in a little bit. Okay, but don't do like this. I mean, because if you do like that, obviously you're gonna see valleys everywhere. Okay, so don't use this definition of this trick like zooming in will tell you what it is. Well, how much should I zoom in, or not zoom in, but stretch the chart up and down. So it's just to sort of feed all price action on the screen so you can analyze it more properly. Okay, so in this case, this would be the trend line. Okay, and what about another chart? Let me take a look at, I don't know, the daily chart, which is a little bit of a mess right now. Okay, so here we've got one valley, okay, over there, one valley. We've got another valley. All these are clear. And then we've got drop. This is a basing candle drop, okay, drop, base drop. This is a CP. And this whole structure is a drop base rally. This is a valley. So this is not a valley and then a CP. Okay, I've seen so many people drawing in the community levels like this, and they would say, okay, this is a CP, and then they are not even considering the lows here. But all these 4 candles, you like it or not, are the are part of the whole structure that makes price rally higher and break these highs. Well, there are no 2 patterns over here. There is a pattern made of 4 candlesticks. So don't try to sort of read candle by candle and say like, okay, this is a drop, base, rally, drop, rally. We've got 2 valleys over there, and you draw the trend line like this. It is not. That's not the way it works. Okay, this whole section here, 4 candles, are part of the same structure. Okay, like these 2 over here, and these 2 over here. The whole swing Kushbo. Okay, so I've seen many people. I've seen people. There is like a bullish engulfing pattern here, and then there is a candlestick like this. Okay, I just can't find the chart obviously because it would be impossible. So this is, imagine the engulfing pattern, and then they will draw the level like this because there is a basing structure over there. So, and that is not, there is not a level at the engulfing pattern. The engulfing pattern usually, when we have an engulfing pattern like this, okay, the proximal line would be at the open or close of the candle on the left, and the distal line would be at the bottom. Okay, but if we've got a basing structure right here within this candle, all this candle also belongs to the whole the swing that is being created, a CP or a valley, or whatever it is. Okay, make sense? So don't do this. Don't draw the level like this, because this candle is part of the whole swing. Okay, you have to do it like that. You will see many times when that happens that these candlesticks are eliminated, or price goes through them into the pattern, engulfing, and then from there starts rallying. Okay, let me read Diego's. So wait until a clear impulse, everything before is a base is not a clear value. Correct. Paul, I am an EV. Is the presentation recorded? Yes, always recorded. It's being recorded. Well, let me check it out. Let me double check it, because it is being recorded. Another thing is that I might have some technical problems and the file is corrupted. It only happened once or twice in 7 years, but they are always recorded, Paul. You can watch it later as many times as you want. Let me read. Rudy, fully straight line needs two higher high and higher lows, right? Until the last higher high, can we not draw a trend line? Let me explain that again, Rudy. So you have to look at till you think of a W, okay, and an M. These are two letters of the alphabet, okay? I will read your question now, Dave. So we've got two letters, the W and the M. So the M is like the reverse of the W. And now tilt them. You have to tilt them a few degrees to the left on the valleys and to the right on the M. So the W would end up like this, tilted. Okay, something like that. So the second impulse, or the second V of the W, has to have a higher low, so than the low of the first valley. Stretch the W, yeah, don't worry. So, and here the high of the first valley, so we've got a valley here, this is the high. The second V has to have a higher high. So the low, higher low, high, higher high, as simple as that. So you get two V's, you merge them, you join them, and then this low has to be lower than this low. So, and this high has to be lower than this high. So when that happens, you are allowed to draw a trend line like this. Make sense, everyone? Rudy? That's the way it is. So it is very simple, but I'm always amazed at how difficult people do it, because this is a very, very simple concept. And I've done a couple of tests with this concept a few months ago, and I was talking to a friend of mine. He's got a child of 7, 8 years old, and even my girlfriend, okay, my couple. Some of you know, okay, Junior knows her, and others maybe here that met her in Tenerife once. So I did a couple of tests with them. They have a child with 7, 8 years old. My couple is much older, obviously. Otherwise, I would be accused of child abuse. She wouldn't be my couple. So with 8 years old. So the thing is that I taught them the basics. Well, not taught them. I explained to them the basics, okay, about drawing the trail lines, because sometimes she heard me here reading out aloud, and I said, come on, because I'm reading some of your trail lines. And then she was behind me and then heard me say that and said to me, why are you saying that? Well, because these guys are not, I'm drawing the trail lines incorrectly, and it is a very simple thing. So I taught her how, the basics, and she did it pretty well, okay? The thing is that she had no knowledge at all about trading, anything at all, nothing at all, okay? And this little child is 7, 8 years old, a child, she just sees these lines are like a game, the same thing, okay? The exact same thing. But then you explain these concepts to an adult that has been exposed to multiple strategies, multiple ways of drawing trail lines with different strategies, and many of them will struggle to draw a trail line following these two concepts. I mean, you've got a V, you've got another V. The high of the first V has to be lower than the high of the second, and the same applies for the lows. Once you have that, you can connect those 2 points and draw a trend line. And the same goes for the M, which is the opposite. A V, inverted V, okay? High, lower, low, low. Now we can connect the trend lines. So what is the problem with that? I can tell you, the community was launched in October 2013, and I've seen so many things in 7 years, my friends. So many things. It's crazy, but obviously, then we have something like the CPs, and that's where things start to get more complex. When in this swing high here in the middle, we see here like a CP, and then you will say, okay, I'm going to connect the trend like this, okay, because there is a CP here, and you think it is a valley, and that's the problem. And I just cannot fix that problem on you, because it needs experience, months, years of reading price action and seeing price reacting to those levels and eliminating those levels and all that, okay? So it just takes time. You just cannot learn all that in a few days or a few months, because reading a lesson, reading a book, how many times have you read a book, okay? And when you are reading a book, one of these self-help books or something that you really like, when you are reading the book or watching the movie, whatever, you are like so excited and you want to tell your friends about it. You explain to them, well, this synopsis or the script of the book or whatever, a summary of the book. Okay, but after 2 days, a week, a month, how much do you remember from that? Nothing. Okay, and when you are reading, you are 7 years old. When you are reading the lessons, and I'm saying you have to connect 2 swing lows and swing highs to make a trend line, blah, 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 like I explained right now. And then you think, okay, I'm not referring to you in particular, to any of you in the chat room right now, but you think that by reading what I just said, your mind has understood the concept without even practicing, without even testing it, okay, without even sharing some of your attempts of drawing trend lines. You just join the community, you are like silent, okay, there doing nothing, and then sometimes I get emails, I'm struggling with this and that, I don't understand this, I don't understand that. Well, why don't you ask? Why don't you post your questions? Well, I'm shy. Well, if you are shy, I mean, it's like going to the university and you have to ask questions to the professor. Well, you are shy, you don't ask questions, you don't have your questions answered, so you fail the exams. Why? Because you were too shy to ask. Well, you are here, you are paying to ask questions and to have those questions answered, and you stay silent. Well, just can't do anything about that, okay? So let me read your questions. First, Dave, can a basing candle of a CP be the same color of the trend? Yes, it is explained in the lesson. The color is irrelevant. The CP stands for continuation pattern and also for a basing structure, okay, base, and also it means a pause. Dave, follow me, everyone? So now, if you are a human being and you are taking a break after working for 4 hours in a row, okay, when you take a pause, does it make, I mean, is it relevant that you take a break outside your office, in your office, at the desk, at home? Does it matter? It doesn't matter. You're just taking a break, aren't you? So the same thing with the markets. It doesn't really matter. So price rallies, it creates a basing structure. So who cares if it is red, green, pink, or purple? It's a correction. It's a pause in the market, like a pause. It's a pause. So I don't care if it is like here, if it is black, or if it is, there's no CP here, so on the blue or the green ones. So here, for example. So I don't care if it is black, or if it is green, or if it is white. I just care about the structure, okay? The structure. We only pay attention to the candlestick structure. Is it pulsing? Is it basing? Yes, that's it. Okay? Oh, hearing something here. I don't know why. This is a bug on Zoom application. Sometimes people will unmute themselves when I have configured the webinar for the, well, as default, it should be muted, everyone. Okay, makes sense? So a pause is a pause. As simple as that. We are talking about the structure of price. Okay, this is the high, this is the close, this is the open, and this is the low. Okay, if it is red, then this will be the open and this will be the close, like here. Well, there's no red candle. Okay, but this is the red or black, sorry. This is the open and this is the close. So this is high and this is the low. Basing candle, basing structure. That's the base. I don't care if it is red or if it is green or white. It is a pause, a basing structure. Okay. So, and now, since we are now discussing the valleys and the peaks and the basing structures, let me talk about as well about why we don't use CPs as to draw trend lines. Can anyone tell me why we don't use CPs to draw trend lines? At the same time, I'm going to read some of your questions. Anton says, I mostly get too confused in those Russian W's and MDLs, one inside another, and which one to choose to pick. I end up at the dead end. And I have almost an entire encyclopedia of trading futures of 3,500 pages. Never have time to read them all. Well, you better don't read them. You're going to have your head full of knowledge that you probably won't be using. So, Diego said that we don't use CPs because they are not valleys and peaks. But that's not the correct answer. Okay? So, the thing is this. They are not part of the trend, really. So, let me explain to you something here. Let me use the whiteboard instead. Okay? So, we've got price rallying, okay? Rallying strongly. We've got one ERC, another one ERC, another one, wide candlestick bodies. I'm not going to draw the wicks, okay? Something like that, okay? 4 or 5, even 5, okay? So what is the origin of the move? Obviously, there is no question about this. This is the origin of the move. Origin, let me say it like that, origin of the move. Origin of the move is down there. So if we've got this structure like this, sorry, no, another ESC, then we've got something like this, 2 candles pausing, okay, then another one, and then we get like a pause here again, something like that, and then we get an ERC like this, like that, pause, another pause, an ERC. Okay. So so we've got 0.1 here, let's say 1, let's say here 2, the basing structure, 3, 4, 5. Okay, where does the move start? Everyone's saying 1, 1. What else? What about, I mean, the move, obviously this is the origin of the move. But then, would you consider trading within here if price retraces down there? Maybe, let me tell you, price drops like this. Okay? Like that. Would you trade there? Would you buy there? No. And why not? Huh? Why not? Would you buy there? Well, the answer is difficult right now. Why? Because this is just one time frame. So this could be like the daily. Okay, so we don't know because this could be a demand zone here, the CP. Okay, demand zone that is nested on a bigger time frame. Let's say this. Let me draw this in with another color. Imagine this is a weekly area of demand or a monthly area of demand, and we've got a level of demand there on the daily. So it depends. Okay, that's why we always say that a single time frame is not enough to make a trading decision. We need a top-down analysis so we can put price action of this time frame into context of a bigger time frame. Otherwise, we don't know what's going on because we could be trying to buy with supply and control, and in a downtrend, you need to know what is the bigger picture. Okay. So what I'm trying to say here is that this is the origin of the move, one is the origin of the move, but then we've got, okay, this. Isn't this another valley? Okay, because this is a rally, it bases, it drops with 2 years this, and then it rallies again. So we've got another move. So now we consider the origin move 4, okay, not 1. 1, it's also the origin of the move, obviously the origin of the origin. Okay, but as price is rallying and creating new valleys, the new origin of the move is there. Okay, there. And as price continues to take off and rally, okay, what do you think is going to become the origin of the move at the bottom? Imagine you've got 3 rallies like that on the daily. Okay, this is the daily time frame. And you've got 1 valley, another 3 valleys, or 4 valleys, let's say. It's 4 valleys. So what do you think one is going to become? While you're thinking, I'm going to read Anton. I don't like peaks or valleys because they are the zones that are retests of the previous original zones. Usually, not always, but that's correct. Diego said 1 is still a fresh demand zone in Delhi. It is a fresh demand in Delhi, but it would also become what? If you see all these valleys for days and weeks, yeah, it is old. It becomes old already. But I'm just trying to let's see if some of you come up with the right answer. I'm trying to. So if price has been rallying for a long time and there is a strong area of demand down there on the daily, and we are connecting trend lines like first from here to here, then from here to there. From there, as you can see, we've got V's and V's and V's and V's with higher highs and lower lows. So that follows the presentation and the explanation that I did previously about the trend lines. Okay, so if we have this trend line like that, okay, connecting these 2 valleys, and forgive me, but I'm not using using the price action, okay, but I just cannot find right now a scenario like that. I would have to have it prepared, but I know that you can follow me. Okay, what happens if price continues to drop, starts dropping, and breaks the trend line like that? Okay, there will be a supply zone over there. So we've got a daily supply zone over there and a daily demand zone down there. But apart from being a daily demand zone here, daily, what would have this daily become? Where would it be located after such a strong rally? That's what I'm trying to. Yeah, the lowest part of this SD range, correct. But remember that this is a single time frame analysis. And I said that before. I mean, we need something else in order to make a trade decision. So what do you think this daily or demand would become as well? Where would it be located? But you don't, Diego, you don't have to see any other time frame. It is by looking at a single time frame, you should be able, if you train your mind and your brain, to know where or what it has created and where it is located. Okay, so if price has been rallying for days, and these rallies could take like 3, 4, 5 days, the retracement, and maybe 3, 4 or more days. The longer it takes for price to retrace, the better, because if it took 2, 3 days to rally and then 5, 10 days to retrace, to correct, it's good to go long. You know what I mean? So we've got 2 years is like that. It pauses. We are in an uptrend, and then starts dropping one candle, 2, 3, 4, 5, 7. That's great to go long there. Okay, that's great. If you go 1 year C and then drops dramatically like this, not good. Okay, so what I'm trying to say is that how many we've got 1 valley, 2, 3, 4 valleys. On the rally we could have 2, 3 year Cs. On the retracement even more. On the pause a few. How many days do you think it's going to take on the daily? How many candlesticks for price to be up there? Can you tell me? I mean, obviously, this is not an exact answer, but roughly weeks, a few weeks. So let me ask you again: where would this demand zone on the daily be located? This would be minimum a weekly area of demand, or a monthly area. This could be like a weekly or even a monthly area of demand. And that's the logic of these trend lines and all that. You connect the valleys, not the pauses, because the pauses are continuation of the moves. If there is a continuation of the move, we've got like emotional trading. People are saying, or many stock traders or forex traders, they are doing breakout and all that. They heard about some news or something happened in the market on a stock, whatever, and they just buying the breakout. Okay, that kind of trading is emotional trading, because you are just looking at the market, seeing that price is breaking higher or lower, and then you enter the market emotionally without, probably, I'm not saying that all breakout traders are doing that, okay? But most of the time, people will just follow some news or whatever, and then will start trading in the direction of those bad or good news. So that's sort of what I would call emotional trading. It is not rational trading. You don't sit down and analyze multiple time frames and say, okay, this is a basic structure, it could break higher and all that, but it's being created as a super strong impulse. We are waiting for a retracement. I'm not going to trade a breakout, okay, expecting a bigger retracement. Make sense? So the pauses are usually pauses after a rally are continuation. It's emotional minds or traders continuing with the previous or prior trend or movement due to whatever volatility spikes or news or whatever that is driving the markets. But the origin of the move is down there and down there. And after days and weeks of rallying, this has definitely created a bigger time frame area of demand. No problem, copy. Makes sense what I just said, because this is very important to understand the strategy and how, not only the strategy, because I believe this defines how market moves. Otherwise, if what I'm just saying, okay, if what I'm just saying is false, okay, is false, then the whole strategy would be useless. And the bigger time frames and the very big time frames that we are using to locate new setups wouldn't work, wouldn't they? Because let's take a look at this, and you have probably seen many of the analysis and the videos that I post and all that, okay? So when you are not looking at the bigger picture, let's take, for example, a look, I don't know, at this one, VIB. You're taking a look at the daily. And what do you see on the daily right now? What will you do here? Yeah, it is easy to follow, really, but difficult to realize in real time when you are in front of the charts. Okay, the daily is out of alignment, yes, Kushbo, but this is, if I saw this, I wouldn't trade this, obviously. I'm not trading this. I don't see clear picture here, only 1 ERC, 1 ERC, then basing candles. This lacks of volatility, liquidity here, at least on these time frames. Okay, gaps everywhere, because of the nature of the stock market. This is a stock. Okay, so the thing is this: when you look at the daily, you see nothing. But when you look at the monthly, do you see something else? What do you see in the monthly? What do you see in the monthly? Huge rally. So all that you saw on the daily is fact, Diego, and everyone. So if you are looking at the daily time frame, and let me just bring to front the daily, which should be down here. Okay, when you look at the daily time frame, all this, okay, is this. So my question is, would you be thinking of buying this asset? In this case, it's a stock. It doesn't really matter. I could change this. Imagine this is euro dollar, the pound dollar, whatever, and this is the 1 minute time frame or the 5 minute time frame. It doesn't really matter because price is fractal and the patterns are repeated on all time frames. So if you see this, you shouldn't be buying there. But if you look at the daily, you probably will be thinking of buying. Why? Because obviously prices being rallying, new valleys, all-time highs being broken. And then when you look at the news, you've got now bad news, not too bad, and price rallies. Okay, it's like, what? Bad news, price rallies? Weird. But the funny thing is that I've seen many people on YouTube channels doing all kind of analysis in the past and all that. And recently, since I started to research about options, I am really, really amazed at how people or traders trade. The biggest time frame that they use is the daily, if they use any time frame at all to place a trade. Crazy. I mean, it's like the indicators. The daily time frame is the daily time frame is like it's God. I mean, this is all there is. No, it is not all there is. I wouldn't place a trade ever using one single time frame, the daily, the weekly, or whatever. But when you put this into context and when you start researching about options, people will not even look at the charts. They are just using mathematical formulas with probabilistic terms, probability of being in the money, out of the money, at expiration, and all that. Crazy. I mean, they don't even look at the time frames. Most of them, they're just looking at formulas and numbers and all that. And most people will say that directional trading, that is trading with a trend, is useless and is not effective and is not profitable, and you shouldn't be looking at trading with a trend. Directional trading is useless. Why do you think they are saying that? I don't know if you've been researching options and the option market and all that, but I'm sure that you've heard that directional trading is useless, and they're using all kind of strategies where they are not buying the underlying, they're just selling time to get premium. You just want time with them and not against them. So anyone, I believe that some of you are option traders here. So why do you think these guys are saying that? Why do you think they are saying that directional trading is bullshit? I'm sorry for the word. It's crap, rubbish. Anton, but if we break daily into 4 hour, 1 hour, 50 minutes, we could find many opportunities. Of course, Anton. That would be low time frame sequences. But in my trading career, I have decided to look or have a watch list of many markets and stay little time in front of the computer instead of looking at a few ones, taking a look at smaller time frames, M15, M5 and all that, because that would require a lot of time. And at the end of the day, okay, those who are trading the bigger time frames and taking less trades, probably they're going to be doing better than this one, or if very, very similar. Why? Well, because it doesn't really matter. If you are trading in bigger time frames and I take 10 trades every 2-3 months, this guy here trading those smaller time frames could take maybe 10 every 2 days or maybe a day if they are scalping. Okay? At the end of the day, I believe that this psychological factor is critical to understanding how the market works and how our mind works, and success in any industry, in the trading market, even industry, even more important. Why? Because imagine that you are a day trader and you are looking at maybe 10 stocks or 10 forex cross pairs. If you're looking at 10 and you're using the monthly sequence, you are going to get bored, really bored, because you are going to have to wait for a long time before you get some trades. So you have to add more assets. But if you are a long-term trader or using the bigger time frames, you may be happy with maybe 3, 4, 5 trades a month, if anything. Okay? But if you are a scalper or a day trader, you probably are trading 5 to 10 trades a day. Something like that. So at the end of the day, you will have a win-loss ratio. Okay? So those trading the bigger time frames will have a win-loss ratio, and those trading the bigger smaller time frames, will also have a win-loss ratio. It doesn't really matter. The win-loss ratio doesn't really care about the time frames that you are trading, doesn't it? It doesn't really care. It's a formula. Okay? It doesn't really care. I don't know about swap-free stockbrokers. I don't know, Anwar. So imagine that this guy has like a 50% win-loss ratio, and this guy has 50% win-loss ratio. Okay? What do you think is the difference between these two? The main difference. The commissions will eat the day trader. That's something that influences a lot as well. Profit, larger moves. I mean, you could talk about the time is very important. Dave said that in private. Time is super important to me. Okay? I don't know about you, but time is something that you cannot change or buy. Even with money, you buy time. What time are you buying? At the moment that you buy time, it's gone. The present is gone. It's future once you buy the time. Okay? So the thing is, I believe there is something more critical here to understand. Maybe it will help you understand why I switch to the bigger time frames, apart from the time in front of the computer. Okay? So if you've got a 50% win-loss ratio, okay, that means that out of 10 trades, 5 will be losses. Follow me? 50% win-loss ratio means that half of the trades that you take will be losses. Okay? The same here. 10 trades in a day, or maybe in 2 days, 3 days, okay? 5 to 5. Okay? But there is something very important here. It's just the same, isn't it? But it is not the same at all. It is very different, at least to me, because you are only analyzing here the rational component of the win-loss ratio. Okay? Rational component. You are not analyzing risk-reward. We're not going to talk about that now, Diego. You are just analyzing one part of the formula of the. You've got the rational analysis. There's a formula. Win-loss ratio 50%, 5 winners, 5 losses. The win-loss ratio is important for success. Obviously, 1 to 1, you will be losing here. 2 to 1, you might be winning. 3 to 1, you will be a winner. So, what about this, which is even more important, because success in trading depends on what? Psychological and mindset. Okay? Psychology is the most important thing. It doesn't really matter how good your memory is, how fast you can study, how good you can memorize things, it doesn't really matter. Okay? Because when you do the analysis here, you know that the higher probability trade is down there. But you didn't have a trade for a few days and then you are thinking, okay, I'm going to rally this on the way down. Wrong, because this could pause here again and rally again. Okay? So the thing is that you've got a psychological component. So what do you think? Okay? What do you think is going to have a major or a bigger psychological impact on which trader will have a bigger psychological impact? The sort of big time frame trader, or the short-term trader? So Rudy just said it, 5 losses a day. Wow, I mean, you have to be a genius to bear with 5 losses a day every single day. Sometimes will be 3, 7, or sometimes you will have 10 winners. I mean, this is the overall. Out of 10 trades or out of 100 trades, you will have 50 or 5 losses. So at the end of the week or 10 days, you will have 50 losses. At the end of maybe 6 months, I will have 10 losses. So which do you think is going to suffer the biggest psychological impact? And psychology, mindset control is number one variable to be successful in trading. This strategy, my strategy, Certain Focus strategy, your strategy now could be the best in the world. It is not, okay? But it doesn't really matter. You've got the rule, you understood the rules correctly, but you will do the analysis with your left brain, the rational side of you, okay? Your rational side. And when it comes to placing the trade, it will be your emotional mind that will take the trade. So it's like, man and women, black and white, dark and light. You just can't let your emotions control a decision that has already been made and pre-planned by a mechanical approach to the markets, by a rational approach. Makes sense? What I'm trying to say. And that's how it happens every single time. Okay? Every single time. So you have to work on your patience and just wait. And if you are not good at waiting, my advice is that you forget about trading, because this here, the intraday and short-term trading, is super stressful. I've met, unfortunately, 2 traders. One of them is a good friend of mine. I didn't know was a trader. He also lives where I live, Marbella, and he had a heart attack when he was young and was a trader because of this. Okay, that doesn't mean that you're going to have a heart attack if you are trading intraday. I'm just trying to emphasize the fact that trading the smaller picture and trading, being in front of the computer, trying to earn your living every single day to get a paycheck is very difficult. You have to think long term, so you can let price do what it has to do. Okay, so let me read your questions here. What about the cost of trades held over days, weeks? That will depend on what type of trade you are taking. If you are trading CFDs, contract for differences, instead of buying the stock, then the daily interest will eat your profits away. If you are trading stocks and you are using a margin account as well, a margin account means that you are borrowing money from the broker. So the broker will charge you a daily interest, and that will also impact on the reward of the trade. If you're using a cash account, there is no borrowing, so that's better. But then you need more money because there is no leverage. So you have to decide. Anton said, even if you get 30% winning rate but still on the profitable side, then it is expectable. Yeah. So makes sense what I'm trying to say. This is not about the strategy. This is about the mindset. And this applies to every single strategy. So the the least that you are exposed to the markets, the better. Because the more that you are exposed, the more trading opportunities you're going to have to take, because you want your paycheck, you want your money, you want it now. You are not probably patient enough to sort of rule out the famous instant gratification. We want things now. We are used to wanting things now, and we want it now. We don't want to wait for a few months for price to retrace down there. We want it now. So it seems we want it now, I'm going to sell on the way down. Assuming, not expecting, assuming that price is going to drop. And then price will start rally again and all that. And we can see an example of that on the euro dollar. Okay? On the euro dollar, we've got the exact same scenario as we were seeing on VIV. So we've got a super strong rally over there. So the origin is right there. Obviously, the very origin is down there. Of this impulse is there. So if you are trying to buy here, it is not a good idea. If you are a scalper and all that, trading the 1 minute, 5 minute charts, 50-minute charts and all that, probably you're going to be able to go short and long. By going long, having a long and a short bias at the same time is very, very difficult, because it's like going out with friends, like I always say, going out with friends to have some drinks. I'm sorry, because there is a woman here, I believe, in the chat right now, and you see a few beautiful women, in the pub, and what do you want? You want to talk to all of them. You want to know all of them, to meet all of them. So you have a drink with all of them, to have dinner with all of them. You have to have sex with all of them. All of them. No, you can't. You have to choose one. Is that the one that you like? Okay, good. Try to conquer her. Try to meet her, to know her better, and see if you like it or not. But you just can't attack to or try to conquer every single woman that you see when you go out with your friends. I mean, you have to decide. So same here in trading. You just can't say, okay, I'm going to buy here. It's like, I like the blonde one and I like the red hair one. No, you have to decide where is the one that you like the most. This one. But this one is not accessible. This one is a really nice woman or man. Okay, if you like men, you're a woman as well. And I prefer to wait for another day with friends. Maybe I will have another opportunity, maybe in a party, whatever, because I know her, seen that girl with another girl, and maybe I can get to know her. So you just have to wait. Everything is, in life is everything is like going out fishing. You don't get catch any fish. Who cares? You just go there because you want to feel relaxed, you want to have some drinks with your friends and talk about nothing, solving the world. Okay, that's it. You have to wait. So will price drop down there? I don't know. Probably will. Okay, let me read. Rudy, you've got your cam on, mate. This is what you want. Okay. Okay, so let me disable it. Stop video. I don't know, this is a bug on this software. Anton said, we need to train ourselves to stay in the vacuum-like state of mind and just execute the plan. If one trade doesn't work, no need to panic. Turn the page over and start from scratch, not to the next trade. That's the right approach. But Anton, the problem is that is your left side of the brain, the rational approach talking. And when it comes to trading, and you have had 5 losses in a row, okay, losses, then all that you just said is thrown to the trash can. Make sense? Your emotional mind, you are a human being, after all, a sentient human being, will be affected by that. And if you are a short-term trader, you might have like 50 losses in a week, or in 2 weeks, or in a month, and that will impact your trading abilities, skills as well. Yeah, the perfect trader would be an AI, artificial intelligence. That's why they are building robots and all that, I guess. But if you try to think as a robot, as much as possible as a robot, then you will understand that you have to wait. You have to wait. Let's take a look at, at this analysis a few months ago, like Apple, okay? So in Apple, what happened here in Apple? So this is, let me use the replay functionality, and let me hide this, okay? If you go back to the community and also the videos that I share on a monthly basis, you will see this level of demand on the monthly. All-time highs being broken and all that. This is a perfect scenario. The same thing happened on Tesla, Microsoft, and so many of them, okay? So after a very strong impulse made of 1, 2, 3, 4 ERC candles, what do rules say? Not me. What logic says? You go to, like I say always, you always say, you like a certain brand of wine, whatever. In Spain, we've got so many. Ribera, which is one of the famous, Ribera del Duero. And I like certain brand. Okay, Toro, which is bull, is a brand in Spain. I like Toro. Okay, so you go to the supermarket and you want to buy that, and usually you pay €5 per bottle. And then you go to the supermarket, to the cashier, and then you want to pay, and then she says to you, oh, okay, you ask her, how much is it? Oh, okay, €15. What? €15? What are you talking about? I buy this bottle of wine at €5 every single time that I come here. 5, 6, 4.50. I'm not paying €15 for that. Would you pay €15? Well, unless you had gone out with your friends and met a beautiful woman, the woman of your life, and you want to have dinner with her. Okay, I need that wine. That's my favorite. She's gonna love it. You're gonna pay it because that's like urgent. It's like death or life. You've got a date, so you're gonna pay. Yeah, Junior, the Alto wine. That's wonderful. This guy Junior, he lives very close to me, and he gave me a present, a really good wine, which is called Alto, crazy wine. It's already finished, Junior, so I need a second one. Okay, good. The thing is, what I'm trying to say here is that why the heck? Why the heck? I'm not using the hell or other words like the fuck, which I should use, sorry for the word. Normally I would use it. In Spanish I would say that, okay? But now this is a more formal approach here, a webinar and all that, and maybe you would be like scared if I said that, but I just said it, okay? Sorry for the word, Coach Paul, okay? So why, I'm gonna say it, why, because this is very important. Why the fuck are you buying here? Why? If you go to the supermarket and you usually buy your favorite bottle of wine for $5 or euros, the currency doesn't really matter, and you go and you are asked for €15, what would you do 99% of the time? What would you do? Would you buy it? Please, I want a honest answer. No, never. Never. So now let me ask you again, and sorry for the words, okay? Why the fuck would you buy Apple here? Because it is the same thing. You bought the bottle of wine, usually you buy it at €5 or $5, and now Apple is at $15. Why are you buying it? Why? Emotions, Diego, correctly. You think you are missing the move. No, my friend, Diego, or you missed the move. You are not missing the move. You missed the move. Or you are drunk, like Adam said. Okay? You are drunk. Okay? You went out with friends and then you're drunk. So then what happens is that then you look at the charts a few days later and then Apple is there. I should have bought Apple. I'm silly. I shouldn't have listened to that guy, me, okay, on the analysis, blah, blah, blah. I would have earned like $1,000. This strategy doesn't work. What he's saying is not working, blah, 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 all that kind of thing, okay? But I'm not saying that you don't buy here. I'm saying that this is not how the market works. After a very strong move and prices get more costly, okay, fortunately, there will be many traders, professional traders mostly, that will not be silly enough to keep on buying. Why? Because it's too expensive for them as well. They created this here. Now this is too expensive for them. Okay? But they are willing to buy again if the price of the wine or Apple stock go down there. Make sense? They're willing to buy again because this is pretty cheap. And it is where the whole move started. Following me? You're following me? Make sense what I'm trying to say? And this is happening with the tech stocks these days, Diego. You just said that. And also with the Qs, NASDAQ, and all those indexes. Same exact thing. Okay? So what happened? This is January 2020. What happened after January 2020 in the world? Our beloved COVID-19. Okay? Fortunately, I haven't been contagious. I didn't have the virus. Sorry, I didn't get it. I had 2 tests. Unfortunately, because I don't care about it. I had those tests done in Iceland, which is, I must say here that these guys in Iceland are great. I mean, I believe it's the only country. When you go to Iceland, you are tested on arrival. If you test positive, you go home, my friend. Okay, and after 5 days of being in Iceland, you have to find 4 of the 5 hospitals in the whole country, and you will have a second test. And if you fail, you go home, my friend. Okay, so, but who cares about the virus? The virus is an event. Okay, an event, like any other event, earnings announcement or a biotech company that was trying to, he proposed a new vaccine to cure the COVID-19, and then it failed. Like now, it's happening with Oxford University and AstraZeneca, or whatever the name of that stock is, of that company, that pharmaceutical company. So if they fail, then the price plummets, the stock prices plummet. Okay, so these events, are what we need for price to retrace. We need something like this. We need a supply area there. It is not the case for Apple. Why? Because this is all-time highs. Okay. We need a supply area. We need overextension or a very strong move. Or we need news, event, some event, news or event. Something like that in order to move price in the direction we need. So what happened after January? The coronavirus is shattering the whole world economy. The world is going to end. Bullshit, my friends. The world is not going to end. I mean, I'm not going to start talking about COVID-19 because I'm waiting for COVID-20, which is due to be released in Christmas time. Then probably I will buy it. But 19, I don't like it. So I don't care about the COVID. COVID is a news event, news event, and it is providing us with the scenario for a potential retracement because it's bad news, but bad news for Apple. Why it is bad news for Apple? It is an IT company. Why is it bad for Apple? Well, maybe because most of their phones are being, or the pieces that are components of their phones are built in China. Okay, and that's bad for them, and the virus started there, supposedly. We're not going to start talking about conspiracies, theories, and all that. It's worthless. So what I'm trying to say is that this is the coronavirus, well, not started yet. So the rule said no shorts allowed, only longs, but no longs allowed either. At this time, longs not allowed, shorts not allowed. So what the heck should I do? Nothing, my friend. No trading. You wait. As simple as that. You wait. As Jean said, it's going to take another 18 months to develop a full vaccine, so lots of opportunities. Perfect. Wait. So now let's see what happened. Now, this is not after the fact trading, or right now you could think like that, but this was analyzed in the community and the videos. You can watch the videos, And also the trading channel was posted way before it happened, okay, like many others. So what happened? Let me cancel this. Oops, I was talking about, oh, come on, I think I canceled it. I was talking about here, okay, not that. So that's the imbalance, okay? So what happened after January? This candlestick over there was January 2020, February, and in March 2020, in the middle of the coronavirus crisis, shattering the whole world, the financial institutions and all that. The whole world was going to end in a few days because the virus was going to kill all of us. Okay? We can set and forget at monthly or weekly, daily, all of them, of course. I am setting and forgetting on 3 months and 6 months, Diego. It all depends on your sequence. So, what happened? The coronavirus, okay, provided us with a pullback. Okay? You were waiting, you were patient enough. Great, you were not. Well, I can't do anything about it. Okay? But now what happened? What is happening right now, my friends? What, can you tell me, can you score me the strength of the impulse here? Good, very good, extremely good. It's awesome. I mean, super strong. Okay? And what can you tell me about this one? The new one. Crazy one. Even stronger. So if you shouldn't be buying the bottle of wine at $15 or Apple at $72, which was more before the split that it had. It was, I think, 3 or 5 to 1. I don't remember. So now, even worse. I mean, not buying right now. You have to wait for the origin of the move, which is there. Okay? If you are doing intraday, scalping and all that, then, well, okay, good, you can short. I'm not shorting. I'm not selling short Apple. I'm waiting for the retracement. As simple as that. As simple, I mean, I just can't stress it enough. I mean, this is as simple as this. But then if you start looking at consolidation stages with a monthly out of alignment, a 3 months out of alignment, the daily out of alignment, bad price action, CPs that look like valleys that look like CPs, what's going to happen, my friends, if you start doing that? I mean, you are going to lose your money. As simple as that. But then you say, oh, well, what should I trade? Any Forex cross pair that I can buy or sell? Any stocks that I can buy today? Why today? Why today? The month has 30 days. The year has 3,365 days. Why today? What do you have to buy today? Why don't you wait? Maybe next week, maybe next month. That's what you have to do. You have to wait. Okay? So if we take a look at other scenarios, assets, let's, for example, this is also analyzed in the trading community and the video analysis. The same thing happened here. This is all-time high, 2 Cs, bearish pink candle, high wave candle, the famous doji. I think this is the gravestone doji, death to the long bias. The longs are dead. Okay, so what happens? Coronavirus, my friend, March 2020, and look at the rally. Let's take a look at another one, because it happened in hundreds of them. Okay, this is Microsoft. Okay, look at that. Same thing, and this was also posted in the community and the video analysis. Several years is overextension, March rally. So now, bearish engulfing pattern, look at the strength of the bearish engulfing pattern. Of the monthly candle. This is the monthly candle. This candle is only 10 days old. This candle is 30 days old. In 10 days, this candle is 3 times faster than the previous candle. What do you think is going to happen? Probably it's going to drop all the way down to the origin of the move. As simple as that. you take a look at the Qs, which is Nasdaq's ETFs. So what do you think is going to happen here? Origin of the move, 1, 2, 3, 4 ERC candles, plummets. Similar picture in so many IT stocks and many other stocks. You have to wait. If you look at the eBay, what do you think is going to happen on eBay? Look at that. 1, 2, 3, 4. Losing steam. Drop. Anton says, all these stocks have a pattern more or less. Even if we could create fake supply demand, according to Fibonacci in the length of previous strength of movement, we are not using Fibonacci. I just want to say that. Sometimes corrective movements still work, even if they are coming out of fake zones. I'm not using fake zones because there's no zone. We don't use fake zones. That's not a definition that we have in the lessons, in the strategy. And we don't use Fibonacci either. So I just can't give you my opinion about it. I use Fibonacci to do this, to paint this. And now I recently learned, I got an email from TradingView that they have added the rectangle extension after years. Okay, they heard my, I don't think that they heard my opinion or read the several emails that I sent them, but it's too late right now. But you click here and where was it? Style extend right, and now you can step rectangles as much as you want. Okay, it's extended, you see, but it leaves the right side of the rectangle over there. I don't like that. I don't know why they did it like that. I just wanted to tell you. Okay, but now I'm so used to using the Fibonacci retracement to draw my levels and all that with the price area here, the labels here. I'm not going to switch. But like I said, Anton, we are not using Fibonacci, and we are not using fake zones because they are not zones; they are fakes. So we don't use them. Okay, that's FOBO is better. I don't know what you mean, Anwar. So trading is super complicated. So adding more layers of complexity and definitions, that's making things even more complicated than they are. Okay. Okay, Fibo is better. I mean, I'm using Fibonacci right now, and it's great. So what is the 50% retracement? Around there. I don't need to know where is the exact 15% retracement or the 68% retracement. I don't, because we don't trade them. I don't trade them in the rules. It's not part of the rules, so I don't care. But I understand that some people come from other strategies and they have been using Fibonacci retracement and EMA crosses and all kind of indicators. We're just using the 20 EMA as confluence. Technically speaking, Anton is saying, however, we don't need to sell in the uptrend, meaning we will need to focus on real-time facts and real fresh zones versus imaginary highs. Yep, correct. So right now, I am willing to buy there on eBay, on the others, on Microsoft, on Tesla, on Apple, and on so many other stocks. Okay, I'm willing, but I'll have to wait. So if we take a look at here on eBay, look at the fractality of price. Super strong area of demand on the 6 months. So we have 1, 2, 3 candles. 3 candles on the 6 months means 18 months, 1 year and a half. But look at what happened, my friends. Okay, so here it won't be 18 months, hopefully, maybe 4 or 5 months, maybe at the end of the beginning of next year, 2021, we're going to have a retracement down there. But eBay is just one of 100 stocks, so you just, instead of trading intraday or scalping stocks, what I'm doing, I'm looking at the bigger time frames. I set my alerts and wait, patiently wait. In the meantime, I'm just doing things like supporting you in the community and going to the beach like I did today, which is by my house, and relaxing while I support you in the community, working on the new website and the new lessons and the new course. Because if I had to do intraday trading and then manage the community, emails that I get, correct you, doing the analysis, the video analysis, and the lessons and the new website and the everything, I mean, I would prefer to shoot my head, because I wouldn't like that. Too much stress. Okay. What is the minimum account in trading stocks? Well, the more you have, the merrier, the better. So if you want to buy eBay, I mean, at $35 more or less, you're gonna need this to buy 100 shares, 3,500, and you're gonna need more of that, obviously, more than that, because you're gonna have to have some margin requirements by the broker and all that. But you can buy one stock or 10 stocks, 10 stock at 35. Some brokers allow to do that. So that would be, okay, $350 risk. So you wouldn't need so much money, maybe 5K. You will be able to do that. Okay. Invent a new drink, COVID-19. Oh, it rhymes with drink and 19. Okay. How is the new course and lesson going? Well, 95% finished, but the course is just the beginning, because and then I need to migrate all the posts and information from one website to the other, and that's going to be complicated. But I'm working on it. Maybe in a couple of months it will be ready. So, but you might be too correlated. What are you saying, Dave? I mean, too correlated. What do you mean? Because I was talking about something else, so I'm lost. So, this is what I'm trying. Let me pull up this document so I can read. Okay, somebody asked about scoring the levels. Thank you, Junior. Okay, all the stocks that are moving the same way, of course, yeah. So you would have to, I mean, you're not going to buy all the IT stocks that retrace to the monthly area of demand, obviously. On stocks, luckily, we have several sectors and several industries, so you can buy stocks that are not highly correlated. You can buy gold-related stocks, you can buy oil-related stocks, IT, car industry, biotechnology, so many things, so many different sectors and industries. In Forex, the euro is consolidating. Well, most euro cross pairs will be consolidating, and probably the dollar cross pairs, because they are highly correlated with the euro. And that's the problem. You are many times forced to look at smaller time frames. And then when you look at the smaller time frame, you get the emotional and mindset problem that we talked about before. You're going to have more losses that is going to impact your approach and your skills in trading. You are going to start not believe in the system. But it is not the system that might be failing. You must ask yourself if it is you that is failing. Okay? There are hundreds of strategies that will work, The problem is that the person or the individual behind the execution is a human being, and a human being is made of emotions, and you are letting your emotions take control of your rational assessments and decisions. And that's the problem in this strategy and in all the strategies and in life in general. If you let your emotions drive your decisions, like I remember I read a book when I was one of the first two books that I read were in English, really. I started to read a little bit later. I read it with 17 years old, I believe. I was learning English by the time, and my teacher, Michael, here in Marbella, is an English guy, really nice teacher. He gave me two books to read. And one of them was The Dice Man, and the second one was the Edward de Bono was the author, Human Zoo, great book. So The Dice Man was an American guy, that took or made all his decisions in life with the dice. So he rolled the dice and he said, okay, I don't like this person, blah, blah, blah. And it is based on real facts. It's something that happened. Someone in the United States was crazy enough to do that. This guy even killed people because the dice said so. He rolled the dice, a 6, and I killed this woman that I don't like because she insulted me or she looked at me the bad way. And then 6, you kill the woman. So, new course. I mean, the new the course is being revamped. There are no new rules, just explain a different way, new examples, new layout, easier to follow, and all that, and new software, new community. That's what I'm working on. Anton, how do you like Thinkorswim? I'm using it. I'm using it for option analysis and alerts. Thinkorswim. I like it. I believe it's the best option platform in the world right now. Super powerful. I love it. You can see the icon here. Thinkorswim is there. I use it for analysis and TraderStation, the TWS for Interactive Brokers. That's the one I'm using for execution. Okay, Junior, bye-bye. So this is, let's take a, what's the name of the company with the AstraZeneca, the one that posts the vaccine essays, AstraZeneca or something like that. What was the name? AstraZeneca or AstraZeneca? AstraZeneca. Okay, pharma. So that's in India. So let's take a look at the one here. I think it's an English one. It's an English stock, isn't it? UK stock should be maybe this one, the original one. So look at that. So AstraZeneca, this is the pharmaceutical company developing, is it German? Okay, let's take a look then at the German one. Should be on this one, but it is not in Germany here. It's not displayed in Germany. Okay, it doesn't really matter. Stuff was from Sweden. Okay, so was from, but it's no longer, right? So maybe here, Stockholm. It's the same thing, after all. Okay, so this is the one. I guess all of them are going to look the same. Okay, so this is what we've got. Let's do a top-down analysis of this one, because this company, they just had the vaccine essays stopped or halted because there was a problem with one of the volunteers. I don't know what happened exactly. I just learned about it because everybody's talking about it. It's like, I'm not gonna have any vaccine on my body. I mean, never ever. I prefer to die before having a vaccine. I don't want to have that thing in my body. I have my own theories, but I don't want that. But apart from that, what do you think is going to happen right now? If we just take a look at the 12-month chart, this is telling us that there is complete indecision right there. Look at that candlestick. Okay, so that's a 12 months, but we are not gonna wait for a year, or probably yes, when maybe in a year they will have safe samples of that vaccine that they are developing. Okay, on the 6 months we've got a similar area down there. This one area here is nested within here. Pin bar, 6 months as well, not good, both bearish and bullish. So same thing happened here. Another, see, 3 months area of demand, 2 year Cs, dropped and rally. That's the trade. And as you can see here, we've got the monthly area of demand to control. This area of demand on AstraZeneca was nested right there at the distal line of that area of demand. So obviously, if you take a look at the daily at the time, you are looking at the daily time frame, okay, alone, because that's what most people do. Most traders do. They will only take a look at the daily time frame. That's the highest time frame they will look at. Okay. So what do you think these guys, a guy or a trader, the typical trader, trading the daily time frame or using the daily as directional trading with the 20 EMA or maybe the 150 cross down with the Bollinger Bands like that, with the CCI, RSI here, the 20 and the 80 overbought, oversold? What do you think these guys are going to do? Jean said that one of the participants was unwell, not related to the trail vaccine, but just as a precaution, trails were halted. Okay, good. So when you're looking at the daily, Okay, obviously shorts is the way to go, isn't it? You are someone trading with the trend. So looks like every single indicator that you use will be bearish. Okay, so I've got something here. I was playing with a template here, and I was using like combinations here just to see how it works. Well, this should load. So something like that. So we've got all the EMA crossed down. Okay, so short is the way to go. So let's take a look, I don't know, with the MACD. MACD is crossed down, shorts. Okay, so you could say, okay, I'm gonna wait for bigger retracement, maybe the Bollinger Bands are pierced and all that, a close above, and then I'm gonna short. I'm gonna sell short. Everything is pointing down, isn't it? Short, short, short. Let's take a look. I don't know, stochastics, maybe RSI. Okay. So now, if you're using a stochastic and prices down there, this is not a sell signal. It is a buy signal, really. So maybe you might be using, together with supply and demand, if you want, to buy. Okay, when price returns to the 20 area, okay, over there, then I buy. You could use that. Okay, but what I'm trying to say here is that we don't need any of that. Okay, this is what we have. But by looking at the daily, it's not enough to make a trading decision, because you know that you're not looking at the bigger picture. But if you happen to be a member of our community, then where was daily? The daily was right there. Okay, right there. So what would you have to do instead of selling? You have to buy. As simple as that. Strong area of demand on the monthly. You wouldn't see that because you were looking at the daily. If anything, if you are an option trader, you wouldn't even be looking at anything. You would be looking the IVR, the implied volatility rank, or the implied volatility percentile to decide which kind of option strategy you're going to use. Obviously, you will want to sell time, because selling time, you have time in your favor, and you are getting paid when you place a trade. You are not buying, you are not putting money from your account, you are given money, you are credited with money. So people are selling, but if you sell, it is very low probability. You have to protect it with the buy, with a long, so you get a credit for that. The difference between the debit and the credit. And that's what they are doing. So they are looking at the chart and say, okay, the expected move is like here, and then I'm gonna sell on the way down. The expected move is there, I'm gonna sell on the way up and getting premiums and all that. That's how options work. But they're not even looking at the charts. They just have expected move is like 900 there, and the expected move on the bullish bearish side is 800. Okay, so they just buy the spread or sell the spread on the way down with what they expect without even looking at the charts. But if you are down here at the 3 months average demand and you are down within the monthly average demand, which is nested, what do you think you should be doing? If you are using spread trading or you're using options, you should buy options. But they say that buying options is lower probability and you will be losing because you buy options and you lose time every single day, because every single day your option loses value. When you sell as well, but you sold, you got a credit, you want the option to expire. That's a basic approach about options, okay? Buying and selling. What I'm trying to say is that these people that say that directional trading is bullshit, is crap, they don't know what they're talking about, okay? Will that work for them? Great, perfect, okay? But don't say that directional trading or supply and demand is crap, because when you are down there, what you should be doing is buying. You want to buy a spread and cap your profit potential, okay? Go ahead. I'm not. I am buying a long-term call. As simple as that. That's super simple, okay? How much do you want for your target, risk reward? You have to specify 3 times the risk, 4 times the risk, 5 times the risk, 2 times the risk, up to you. But there is a lot of room for price, so you decide. if you have to have the guts or the balls or whatever you want to hold the trade for long. Okay, that's maybe price. In this case, it's like great, it rallied there in 2 months, but it could take a year to do that. Okay, does it make sense? When price was there, the daily was here. So if you don't know about the bigger time frames and supply and demand, you would be selling instead of buying, and you could obviously lose because price, look at what it did. And the same thing on Tesla, like we saw before, on Amazon as well, on Apple, on Microsoft, on Caterpillar, on eBay, on so many stocks. Okay, I'm not talking about Forex right now, because on Forex there are no new 3 months average demand created every day or every 3 months. It's very rare. It takes time, and there are so few crosspairs. On stocks, there are unlimited, so many, hundreds, thousands. That's why I'm using stocks as an example of this analysis. Okay, let's take a look at this one, the last one. Okay, Ryanair. Okay, I believe every European knows about this aircraft company, these airlines. Okay, I don't like this one. Obviously, I don't want to fly with them because, well, you know, low cost and how they treat you. It fell short of retracing to that 6 months area of demand. Okay, it didn't hit that area of demand. And this one, if you were trading the 6 month sequence like I'm doing, or the 12 month sequence, the 12 months area of demand is way down there. That's gonna be really a great trade. Right now it's at 12 pounds per share. This one would be at 4 pounds per share. That would be great. So here, as you can see, there was a new area of demand after the trend line break. But this month, the area of demand was not nested within the 6 months area of demand, so you will have to wait. And you could have bought. The difference between, and this is very critical, who in this chat room, who is trading options or knows about options? I believe some of you. So imagine this is a Forex crosspair or a stock and you are not using options. Okay? So this is a demand level, and it scores really high, isn't it? Really high. And look, basic structure, great. Several ERC candles. I mean, great structure, great scoring. If you place a trade, imagine this is a Forex crosspair and this is daily time frame. Probably the stop loss was hit over there, 25%. Probably, let's say that the stop loss was reached, was hit, and you had a loss. Okay? This won't happen in options, because options do not have stop loss. Okay? You buy time, you don't buy the underlying. So that's the beauty of options. If you believe in the level, okay, you could say, okay, I buy options here. And you buy, let's say, half a year of time. You buy time. So you don't care. You have 6 months for price to reach your target. It doesn't really matter if price drops underneath the level, because you are not stopped out. The options do not have stop loss. You buy time. You could set a stop loss there. Okay, I could say if price drops below 750, something like that, then sell to close my option. Okay, you could do that, but intrinsically, when you buy an option, you buy time. You don't place a stop loss. So that's also why I love options. Why? Because how many times have you taken a trade at a great area of demand as being overshot and then price rallied in the direction that you expected? How many times? Did that happen to any of you? So many times. Option trading is not covered right now in the community. It will be maybe in a few months, maybe half a year or something. It's going to take time to do the lessons and all that. But right now it's not there. So it has happened too many times. So imagine if many of those times wouldn't have been losses. So options would allow you to do that. Okay? Well, you can buy a put to protect your buy call as well, but that's adding more money and more commissions. And well, there are many techniques to do that. But if you believe in it, because okay, you buy a put to protect it, and then price drops, continues dropping, and then you are in a loss in the buy put, and also, oh sorry, you are in a loss again on the buy call, and you are earning on that, but then on the buy put. But what about price rallies again when you protect it? So you are like playing ping pong. You protect it, and then price rallies and drops. So trading, I don't think trading should be more difficult than it is, really. So the thing is that you want to buy, you just buy. Okay, how can you buy here? Ryanair, which is a stock. Well, you can buy the stock, the underlying, because you believe in this company for long term, and it is very cheap, £9 per share. So you spend £900 because this is a British stock, okay? So you spend £900 as a long-term investment. You don't really care about stop loss. This is a long-term investment. If you are speculating, okay, then obviously you want to be protected, and you would be losing on this one, okay, because the stop loss would be hit over there. Then you can also, in some countries, in Spain and many other European countries, you can buy the CFDs, which is a sort of contract for difference, has much more leverage than stocks, and it allows you to buy more lots, more. But the problem is that it has very high rollover rates on a daily basis. So if price doesn't rally very, very fast, you are going to be losing most of your profit in commissions and in the rollover and all that. Then you can also buy an option, okay, an option. Then you can buy on options, you can buy spreads as well, but the spreads are capping the profits. There are many ways to buy here or to trade this imbalance, but not looking at where we are, where price is, I wonder. My conclusion when I look, when I've been looking at option traders in some YouTube channels and all that, trying to learn about options, my conclusions is very, very pretty straightforward. These guys are saying that directional trading and all that is useless, and they are using only selling strategies because they don't know where to buy or where to sell. When you don't know where to buy or where to sell, what do? You buy and you sell. Like Clive said. Okay, you buy here and then you start dropping, you sell, you protect it. Then you are buying, you're selling. Okay, but if you know where you are buying, you don't need to buy and to sell. You know what to buy, you buy. As simple as that. You know what to sell, you sell. I mean, to me, trading should be very simple. It is a very complicated craft. I mean, it could be said it is an art. Okay, it is very complicated. If you start adding more layers of complexity to a thing that is already super complicated, the outcome is very simple. Is failure. That's what I think, in my humble opinion. Okay, so in the future we're going to have option courses and all that, but it's going to take some time, obviously. So it is not very difficult. There are some concepts you need to learn, and at the beginning it's going to be a little bit going against logic, but once you grasp them, it's not that difficult. But in summary, what I'm trying to say is that these bigger time frame imbalances play out really, really nicely, and you have seen probably, I could show you hundreds, not dozens, but hundreds of examples. And many of them called in the community way before price retraced to the levels, way before, months, years before. Okay, so if that is not enough for you to trust in the strategy, I can't do anything about it, really. Future trading, well, I can tell you right now, I'm not trading futures. I don't need to trade futures unless you are a futures trader. Why are you trading futures? I don't know, maybe your job is forcing you to trade futures. I've got enough with the stocks, so I'm not even learning futures with all those kind of contracts and all that. I'm not interested in futures, so maybe we'll have a course on futures in the future. Well, I don't know. Right now, I will tell you that no, because why should I learn about trading futures or all the differences of the futures contracts and all that when I've got what I need on stocks and forex? So, okay. We don't use support and resistance indicators, POCAR. This is all we use, which is nothing. So we don't use that. It was, you said, that's exact, correct. It was years ago when I was experimenting in the beginning. But have you seen the word support system mentioned in any of the lessons? Have you seen any indicator or any chart with support resistance indicators in the lessons? Nope. So it is not there because we don't use it. We don't need it. Okay? We don't need it. You will still want to use support system. Okay, you can use it, but you have to develop new rules that will support and resistance. We are trading supply and demand. We don't need anything. We are using only the 20 EMA as confluence because it's proven over time that when price retraces to the 20 EMA or 20 moving average, 20 days moving average, sorry, which is like the average of a month of trading, okay, price many times will react to it. But we will not trade directly off the 20 EMA. We will trade as using it as confluence in a trend. That's the rule for the 20 EMA. But you can discard it. You can delete it from the chart. We don't need it. We just don't need it. Okay. And Forex.com uses TradingView, and do you know if your tools work on Forex.com? Well, the tools that I have created, the engulfing pattern and all that, work on TradingView. I don't know if it is TradingView, should work, independent from the broker that you are using to connect to TradingView. You can use TradeStation, FXCM, maybe as well Forex.com. I don't know. You should ask your broker. I just don't know. Okay. Sam, let me read you. Hi, Alfonso. One, I'm having some difficulty in establishing origin of the moves. Please go through a few examples if you have time. I have already gone through the data at the beginning of this webinar. Maybe you were not there. Is there an objective way of classifying whether a peak value is obvious? As explained in the rules, it should be obvious. Obvious is obvious. So this is obvious. Okay, this is obvious. Okay, this is not obvious. Okay, so objective way, I mean, it has to be super obvious. So you've got a basic structure there, basic structure. You need a candle like this. Okay, something super obvious. That's the obvious thing. There is no percentage. There is no something like if it closes below, above a certain percentage of this high or this low, then we will consider it that. There is nothing like that. Okay. No, we are not using Fibonacci retracement, so we don't use that to decide if it is a peak, a CP, or something like that. I'm afraid that rules are necessary, but they are not the only thing you have to use. You have to use your mind, you have to use your time, you have to you have to have the willingness to test and look at the price charts for hours and weeks and months to learn all the nuances of price action. Once you do that, you will never ask again what is an obvious peak and what is not an obvious peak. Because if I tell you that this is an obvious peak, okay, you will believe it. If I tell you this is an obvious peak, you will believe it. If I tell you that this is not an obvious peak and they are usually eliminated, then you will believe it. You will believe me, and it was overshot. But the thing is that there is nothing that can beat your brain from analyzing hundreds, if not thousands of scenarios. I can tell you, okay, this is a peak, it is not, okay, it's very unclear. This is a peak because I've seen 1020 scenarios like that. And out of those, I mean, let's say like 700 of the time out of 1020, they have been respected. So I would be interested in considering those as tradable areas, okay, because they work more than not, okay. So, but I just cannot test all the price action and all that. So I just don't have any physical time. I'm alone. I'm a human being. I have limited time. I know that these are lower probability. The variation impulse is very bad. So if it is unclear, consider it as CP and don't trade it, obviously. This one, yes. This one, yes. Let me read Anwar. He's got a problem with the bias. My weakness is identifying where to take the trade. Well, that weakness is solved with the realignment rules. But the charts that you are posting and were in your thread, in your channel, which is testing the realignment rules and all that, they are mostly consolidating. That's your problem. If you are trying to learn with dozens of examples with scenarios in consolidation or supply and demand areas under attack, you're gonna have trouble learning the strategy, because you obviously you have to know where time frame is out of alignment, is consolidating, but you have to know about these scenarios to know them, not to trade them. Instead, maybe you might be interested in them to trade them. That's a problem. So I would suggest that you use other assets like stocks in a clear trending market and test yourself doing that instead. How are you setting on forgetting using 6 and 3 months levels? Won't a lot of your options expire before the move? Yeah, no, I will. I mean, the set and forget, I mean, I said it in the wrong words. If this is a set and forget type of level, okay? But I will have to wait. I will have to wait for time. I will have to wait for certain price action like engulfing patterns and all that to happen before I even think about trading them. I mean, this is a set and forget type of level, but I am not using it like, okay, it hits the proximal line and I buy. No, unless I buy 2 years or 3 years of time, that's not for me. So you have to wait, okay? That's the only way to do it. You have to wait. One more question from Sam. When trying to understand CPs, I found some older posts in the archives about mother candles. Can you show an example of one, please? It was mentioned right at the beginning of this webinar, the mother candle on one of the CPs. Well, let me try to, okay, like this one here on the monthly. Where are you, my friend? Here. Okay, so you've got this mother candle. Mother candle means that it is the first candle that poses, okay? So here, as you can see, this is the low, and the close or the open doesn't close underneath and all that. So these candles are opening and closing within the candle range. Make sense? That's what we consider the mother candle. So if this candle, instead of doing that, it closed and did something like this, clearly underneath the low of the mother candle, then we would consider this a valley. Otherwise, this is just a pause. And if it closes, imagine that it closes like slightly underneath. That's not enough. It has to be a clear one, okay? And I just can't see anything here. I mean, we have to look at many charts in order to find examples, but this is the closest one that I came up with when I looked at it, okay? Let me take a look at Apple, and let's see if we get CP mother candle. As you can see, no closing or above or below. Mother candle, as you can see here, no closing underneath. See that, Sam? See what I'm trying to say? What if this candle, instead of doing that, it would have been green all the way down, including the lower wick. That would have been a valley. But it did not, as you can see. It just dropped. This is the low, opened here, dropped, and then rallied. That's the concept, okay? And I believe this is the end. It's been 2 hours already, and it's a little bit too late over here on this side of the world, in the south of Spain. I thank you, everyone, for attending this webinar. Hopefully, you will have a slightly clearer understanding of the rules and how the market is supposed to move. Not how it moves, because obviously I'm not claiming that this is how it moves, how it works, but it describes quite accurately most of the time how the market moves and what is the expected move once certain price action candlestick patterns have been created or certain moves have happened, okay? Anton, please send me an email instead to info@serenfoket.com, because I don't know if I'm gonna lose the private message that you send me, okay? So please send me an email instead. Okay. Thanks a lot, everyone, and have a good night and stay safe. Bye-bye. Good night.